Hey everyone, welcome to our 11th episode of the Collections Made Digital Unwrapped Series. Our Unwrapped Series sessions cover chats with members of our team, discussions with people from the industry, from one-to-one chats, wider roundtables, as well as webinars, whilst keeping everyone informed of what we're up to at Debtstream. Now, on to today's session. So, we're continuing to see the change around technology in this landscape, and that can be from, payments experiences, digital experiences, through to AI coming through in the collections and credit management industry. What we're going to look to is really delve into around payments technology and the experience that can generate for a customer in the digital ecosystem, as well as maybe we'll have a bit of a fun conversation around Apple's new feature on their iPhones, Apple Intelligence, that they're looking to roll out across other devices as well, and see what does that mean for the future of customer experience. On that note, I'd love to introduce my guest for today. We're joined by AJ Davison from Acquired. He has over 10 years of experience in the payments sector, from starting over in New Zealand, where he's originally from, to supporting customers in the Australian market, now venturing over to join us in the UK. So over to you, AJ. It's really good to have you along for this next session. But first of all, before we get started, how are you? And I'd love for you to tell everyone a bit about yourself and your background in the industry.
Thanks, Martin. Great to be here. It's always good to chat with you and jump on a podcast or webinar with you
Always
guys.
great.
So a little bit about me. As you mentioned, I've been in payments now for coming up on 10 years. Wide variety in the payments ecosystem space, from American Express, starting out my time in New Zealand, to, I suppose you could classify as an issuer and an acquirer, to moving more into the alternative payment method space. So I spent some time in the B2B, buy now, pay later space, over here in the UK. And more recently, spent some time. More recently, of course, I've been at Acquired. So, Acquired's a payment gateway provider, and we have connections into 5 of the acquiring banks for card processing. We're also regulated and have our license for PISP, or open banking transactions. We've recently launched our direct debit proposition, which is proving very successful, and we're seeing a lot of traction in that space. And of course, our send and receive product as well. So, utilizing the faster payments network for sending money, essentially.
So it sounds like you've all been pretty busy over at Acquired, right, over the last year or two as well.
Oh,
and I know through our interactions, we definitely have been, of everything we've been doing together. But yeah, sounds like the man in the know to speak to bring onto this session to talk about everything payments, right?
Yeah.
With your background, but maybe as well we can touch a little bit on direct debits as well, because I know that's one of your new exciting elements, like your propositions you've been launching. But it'd be really good, just AJ, thinking of everything we've been doing together as well across Debtstream and Acquired, to really change, I guess, ourselves, like the digital collections landscape, the experience of customers that are falling into arrears and going to collections and recoveries, and yourselves really changing the payments landscape. It'd be good to just kind of stand back and talk about some of the great things that we're doing around payments, but also the importance of customer experience within that space, especially when things go wrong and it's not necessarily a nice subject to deal with, right?
Of course not. I think it's an ever-evolving sector, and it's a part of everyone's life when you think about it. I mean, payments. Yeah, more or less everyone on the world interacts with, some form of payment at every point at any point during the day. So it's an incredibly important sector. And, as I mentioned, it's an ever evolving space with new products and new technologies that are coming out. And, we at Acquired find it, paramount to kind of bring those products to the forefront and introduce them to customers, because certainly something that, we're finding is that, businesses don't fully understand what's available to them, that can really improve things from a cost efficiency perspective, and certainly from an operational standpoint as well.
I guess though that's the great thing though, to be honest. I think with everything that we've done together, it's heavily improving the customer experience, right, which is like paramount for, like, you know, all the companies we speak to in this sector. That's the paramount focus. But actually, to your point, it's doing the right thing, providing a better experience, but it's far more cost effective, or providing better payment rates, for instance, acceptance rates. So it's kind of like increasing collections, better experience for customers, whilst also reducing costs. Pretty good blend, to be fair, right?
Exactly.
One thing though, thinking about that, and it's something we've been doing across a couple of joint clients now together, and that I've seen. I thought it was a brilliant approach from Acquired when we started working together across our products and how they would support our joint clients, is network tokens. Now, if I was going to reflect back, for instance, about my time when I was at CapQuest and Arrow, before thinking in building the collections and recovery strategy, with a CPA approach, you go through all the effort, the outbound communications, maybe dialing activity, everything you've been doing, all the cost around it, the actual time for the customer to go through a process and take the time to engage, whether it's a digital process or whether it's offline through the call center or another channel, to structure a plan based on their affordability and put the payment method in place. For them, that's it. It should be done. It's affordable. It should be able to just come off on a monthly basis. And they've used CPA, tokenized the card as a method. But what we've seen as a legacy thing is, great, maybe it's 2 years, 3 years, depending on how long that card had left before it expired. The card would expire, it would drop off, and it would fall back into like a failed payment plan type strategy for us, but to do outreach to the customer to get a new card reset up, which, to be honest, then there's more cost driven from the business. It's a bad experience for the customer because they think, oh, well, I've solved this, right? It's there, it's in place. But I know with everything you've been doing at Acquired and how we're working together, network tokens are a big game changer.
Oh, I mean, 100% they are. Like you mentioned, right? You've already gone through a lengthy process to sign up the customer and get them onto that payment plan, commit to the CPA, right? So really the last thing that you want is the card expires, or, you know, it's lost or stolen and a new card is issued. Then you have to go through that original journey of kind of contacting the customer, getting them to re-sign up. It's a difficult process, and one that, you know, businesses really don't want to encounter. So we integrated directly with Visa and MasterCard for this product, and you know, essentially what it does is it replaces the 16-digit PAN or 16-digit card details with a network token that is issued specifically for that business and the customer. So number one, in the event that those card details that are associated with the token is, you know, expires or, you know, is lost or stolen and a new card is issued, you can still process against that existing token, meaning you don't have to reach out to the customer. On top of that, because it's no longer 16-digit card details, it's a token, it's significantly more secure of a transaction. And so typically you can see significantly less fraudulent or declined fraudulent is the response code that we typically get back, even if it's not fraudulent. You know, some of the issuing banks might classify it as fraudulent. They know it's a more secure transaction. So typically you'll see higher authorization or success rates. It's a great product, and you know, I think it's perfectly suited to anyone in the collection space, right?
Yeah, and there's a few different angles there, right, that you mentioned, and like I just said a moment ago, I've been on the other side of the fence with this as well in an operation, but like paramount, the customer's experience is far better, right? And for like we said earlier, this is when something's gone wrong based on either a life circumstance or whatever's happened. to put them into this situation where they're behind with their bills or they're in debt as well. So they've gone through everything as well, quite an anxious process. Hopefully digital platforms that are driven around the customer make it a little bit easier as well through that, but they get an end outcome. So that means that with the network token approach, that's it. Great. They genuinely are done. As long as that maintains and that plan continues to be sustainable for them and affordable, that's the plan in place. For the business, they're going to reduce all that additional cost in regards to customer outreach for customers when they expire. There'd be some customers they're never able to get back in touch with again, for instance, right? So actually that's like lost collections, additional costs, and everything else in between. So it's, well, to be honest, that anyone who's listening to this right now, you should probably be discussing network tokens, right? Like, it's genuinely something you should be looking at. If you use tokenization or continuous payment authority in your operation, you should be speaking about network tokens.
I mean, I completely agree. I mean, another thing to mention as well is that, consumers at times can be a little bit cheeky, I think, and they can raise chargebacks, for example. We've seen it before with cardholders raising charges or chargebacks for, they're calling it fraudulent transactions, right? It can also shift the liability from the business itself to the issuing bank because the token's been created. It's specifically being created for that specific merchant. It can shift the liability for fraudulent transactions. So, I mean, there are a lot of really useful and unique benefits to it, I think.
Well, you said security as well, though, right? Like, that's a huge advancement. To be honest, we're going, especially as we go into more and more of a digital world, right? Security, it continues, rightly so, to be a focus and at the forefront of everything that's been done across businesses, especially in the regulated space or where they're dealing with highly sensitive subjects, right? As well. So the fact that actually it gives that extra layer of security, right? Well, I've talked about costs, increased collections, customer experience, but there you go. There's another benefit to throw in as well. And this we're talking about kind of one feature in the payments ecosystem, right? Thinking about everything that can be done in a modern payment stack, like everything we're doing together. But like, AJ, one thing I know that we've seen, for instance, when we've rolled out together with customers, that is we've seen overall better engagement. For instance, we're driving customers through to the right points in the journey. And then with your payments technology, we're having far higher conversion, for instance.
Exactly.
So one example, I remember a client that was like early 80s and we're getting them to over 90% in regards to authorization rates, right, which is a huge shift.
Yeah, it's huge. It's a monumental shift, really, because if you can think about it, even if it's as low as 3 or 4%, if you're collecting 5, 8, 10 million a month, it is a significant amount more that you're able to collect, and that you don't have to reach out to the customers and say your card's declined for whatever reason. I mean, you're not going to get a great success rate from that anyway. And you're going to have customers falling further into arrears or further behind on their payment plan. So, I think it's a win-win-win, I suppose.
Well, what I found really fascinating about Acquired, right, as well, is the physical terminals. For instance, thinking about that, and I know you guys have gone through a bit of an innovation moment of how do you bring pay by bank and like starting to bring alternative methods right into the physical world as well. I'd love for everyone to hear a little bit more about that. Right, we're not doing anything specifically together, but I can still see in scenarios of customer experience when it's around payments in credit, whether that's upstream, for instance, before they've fallen behind, right, or further downstream. But even stuff like that is where Acquired's focusing. How do we make this a better experience, but also introducing technologies, not just in the digital space, that's in the physical as well.
Yeah, definitely. So, I mean, we partner with a terminal provider called MultiPay here in the UK to develop a essentially pay by bank on terminals, which we believe we're kind of the first provider out there in the market to provide it as a sole proprietary product. in essence, there's a huge amount of benefits, but it really translates, I think, across different sectors. If you think about motor vehicles, for example, motor vehicle dealerships, you know, someone wants to buy a car. If they're spending £30,000 on a car, the car transaction itself is, that's a significant cost that the motor vehicle dealer has to, incur. And then, of course, you've got the settlement timeframes after that. It can be 3, 4, 5, 6, 7 days to then receive the money from the card transaction. Whereas with open banking on terminals, customers at the motor
Yeah.
vehicle dealership, they're signing the papers, generate the QR code on the terminal, customer scans it, reloads their banking application. They then select it, select the amount, process the payment, and it instantly settles to the merchant's bank account, which provides better cash flow. Overall, it's great for the business, I think.
Yeah, I agree. I totally agree. Right. So once again, I guess this is the thing, right? The capability of new technology. You're thinking, how do we introduce into the physical terminal world the cheaper processing side, which is great for merchants, especially I think retail, right? It's a sector that continues to be squeezed on costs and everything else. We were talking about consumers, for instance, and obviously them falling into arrears and behind, and the current landscape has been tough
Mm,
on consumers, but it's also been tough on businesses, for instance, as well, that they can fall into financial difficulty. But potentially some
of
of these
course.
smaller merchants, right? You've provided or created a solution that can actually help reduce some of the payment costs.
Exactly, exactly. And, if you think about like bespoke furniture or bespoke kitchens or things like that, the lead time on that is significant, right? So
Yeah,
acquiring banks will tend to hold a reserve, maybe 2 or 3 months worth of card processing, because the risk is that, if a customer orders something 6 months in advance and they pay the full balance, if that business goes under it in that six
yeah,
month period, the acquiring bank will receive a number of chargebacks, so they'll tend to hold a reserve against it. So, there's a lot of unique use cases. I mean, open and transparent. If it was at my local coffee shop, I probably wouldn't go through the process of, doing a £3 transaction.
yeah,
I just pay on Apple Pay, right? But,
yeah. Exactly that. It's
for a
kind of like time
significantly
and place, right?
Exactly. Exactly. There are use cases for it. So, that's why we've kind of built it and kind of having an out of the box solution, I think is quite important. And it's right across our different products that we provide, a low cost, no code integrations in essence, just an out of the box solution.
But it's interesting though. You say like for a £3 transaction, you'd use Apple Pay, right? Which like, I'm right there with you, by the way.
Yeah.
Uh, Apple user, everyone on that. Don't It's I love the tech. I love Apple Pay.
Yeah.
So I'm right there with you. But I'd love to touch. We talked about AI earlier, right? Talking about Apple Intelligence, but before we talk about Apple Intelligence specifically, just to stand back there, there's opportunity where AI is going, right? And it's still companies are looking at how they utilize it, the use cases they can build around it, for instance, on AI. But personalization, I still think, for instance, since generative AI has come out, personalization is still going to be a huge piece where the
Mhm.
ability for personalization is going to shift massively because of it. But understanding the payment methods, what about the hit based on the history of the customer? Do we present at the point of a payment plan the acquired direct debit product, which is nice and simple for them to take up, or the CPA payment, or tokenize their card by Apple Pay, because we know that is the best method to make it easy for them. But I think there's a lot of opportunity starting to come in with some of the AI technology around personalization for the cut, like what payment methods are the best to present to the customer at the right time. To your point,
Exactly. Yeah, yeah, I completely agree. I mean, we're seeing it more and more now. I think I read the other day that over 75% of people are now using AI on a daily basis, which is
Wow.
like something from like 63% from a year ago. And I mean, with them rolling it out across Apple devices, I mean, it's only going to increase. I think really the interesting thing is what's it going to look like for consumers from a financial services perspective. Are they going to be able to, identify to you that you're spending less this month? Like, does it prompt you to save it or sweep the funds into, a savings account? Or do they prompt you to say, hey, listen, you've got a loan right now or a mortgage, you've saved some funds, you're better off paying this off now because it will wipe off X number of months or years and the total accrued amount on the actual loan or mortgage itself. So
Yeah, it's
initially just actually
interesting.
putting consumers in, a better financial position. And,
Is it going to be
obviously,
genuinely be like a financial assistant in their pocket
exactly,
potentially? Because
exactly.
how integrated and what Apple have done, for instance, actually, if we lean into the Apple Intelligence side of that, what Apple have done on their wallet, for instance, they've started on, I'm assuming there's open banking technology behind it, for instance, so you can integrate your banks, for instance, accounts in the Apple wallet, for
Mm,
instance, to come through. But everything Apple have started doing around payments and the ecosystem, Apple Intelligence there as well, that potentially really is a financial assistant in your pocket.
exactly, exactly. I think it's quite an exciting time for technology as a whole. And, even if you think back as long as 10 years, well, as little as 10 years ago, what's been brought out to the market to kind of help consumers is quite, it's really at the forefront. So I'm excited, I think, for the next 5 to 10 years to see where it takes us next.
Oh, definitely, 100%. And it's crazy potentially where the AI technology is going to go. So, like, if you're thinking of Apple Intelligence, maybe just for people like you and I, right, just in
Mm,
a startup environment, for instance, or a scale up environment as well, like we're Apple device holders. The Apple Intelligence, for instance, mean you could have a phone call. You can actually set so it then automatically summarizes the call and pushes it into Apple Notes. So it's all integrated, for instance, or then overlays into an email, for instance, and actually helps you adjust real time around the email.
yeah,
So thinking of that from a kind of work or startup perspective, for instance, or organizations like ourselves, how it can integrate to our life. And then on the customer side, the personal side, if it's got that ability to summarize those notes, capture the conversation, thinking of, and we partner with dialer companies like TCN, we work with really closely, thinking about this technology that could be hooked in to actually the customer might say, look, I just want to be able to go and make a payment over Apple Pay. I know it's secure, right? Just giving a flippant example, but to automatically then pick that up and generate a pay by link, for instance, that they can go and then transact straight away. It's like
exactly.
landed there straight away for them to pay it. Like
Yeah.
it's how connected and seamless this could end up being, right, for a customer.
Yeah, exactly. And, at the core of it will just be providing customers with better outcomes, which at the end of the day, is what we're all here for, right?
Well, exactly. And look, let's be honest, in the sector, especially the sector we've been serving together, and we have a lot of
Mm,
focus on in the collections and recovery space, consumer duty once again. So
exactly.
it just massively aligns. And I know everyone's probably heard so much over the last couple of years around consumer duty, but it's really pertinent to your point to drive better outcomes for customers. Tech is a huge enabler. And like you said, it's really exciting to see where it's going to go over the next couple of years, especially with some of
Oh,
the
100%.
advancements around AI as well.
100%.
But look, AJ, like, thank you for joining us today, and it's been a really good conversation. I'd love to just hand over to you as we're wrapping up the Unwrapped series. No pun intended, but love to hand back over to you if there's just a final summary or note that you'd like to send out to anyone watching
You
about what
know,
we've discussed today or required generally.
I think for me, it's realizing that payments doesn't necessarily have to be a cost to your business. It can be a commodity that you can really utilize, utilize to improve your collections. You don't know what's out there really. So, you know, uh, take a different viewpoint, I think, on payments sometimes.
Brilliant. A different viewpoint. Yeah, think outside the box, right?
Yeah,
Don't just think of it as, oh, it's payments tech or it's
yeah,
like just digital tech. It's well, dialer, voice tech, right? Just generally I think it's a good thing. So think of payments of actually what it can mean for your business, what it can mean for your customers. Use it as an advantage, not just a necessary part of infrastructure.
exactly. Just not a necessary part of doing business. Utilize the data that you can get from payments as well, the reasons for the declines, why you're having declines, etc. So, I think, as I said, utilize it as a commodity.
Brilliant. Well, look, maybe that's part of a follow-up conversation, though, as well, is utilization of data as well and what it can mean. But look, AJ, like I said, appreciate you joining us today. And just as a final message from me, as always, the aim of our series is to add value to people in the collections industry. So we're using our team's background experience. Gareth, Leo, and myself have over 20 years' experience in the collections and recoveries market, from building out the digital platforms across Arrow Global, Hoist Finance, and others before founding DebtStreet. So we really, as always, want to enable the industry to drive digital collections for our solutions. But that is all for today's episode. So thanks everyone for listening, wherever you are in the world. And make sure you do keep in touch for our different channels across like YouTube, LinkedIn, etc. And look out for the next episode in the series. But once again, AJ, thank you for joining.
My pleasure, Martin.